What's up, everybody? It's Marco from Digital Dash. In this video, we're going to be going over context, conditions, and why it's important to spot when conditions are changing. And I'm going to be talking about other ways to define my trading success that's not P&L related, right? So a lot happened today, and I spotted a lot in the market and was able to learn a lot from the markets today. So getting right into it, I want to talk about the range that we're seeing form on the daily, and because of this range, it was creating less than ideal market conditions for me. So I was able to spot that, and I was able to spot some patterns as well that was happening so that I can adapt my strategy. I can tweak my entry criteria, and I can know, again, if I just choose to wait until these conditions change to become present in the market, I have that option as well. So I have two different ways to try to prevent more losers, to try to create more guidelines for what I want to see to keep me out of the market, what I want to see to trade these different conditions, and breaking down some of the losses that I took and really understanding what happened with those trades because of the market conditions that we're seeing. So because we're seeing this range, my entry criteria and the reasons why I get into a trade needed to be tweaked. So 3 days, no candle break through the highs and the lows that were created by the previous day's candles. Too choppy and price action is uncertain. These are not ideal conditions for my strategy. We are seeing breaker structure zones fail and next nearest zone getting run before holding up and turning around, trapping both buyers and sellers to make this move. I'm not looking to put on full size until better conditions are present. For now, we have to continue to locate where we must buy under previous day's low and or previous day's open. These are our buy areas, and where we must look to close buys or sell previous day's highs. Above previous day's highs will be our sell area. For now, we are seeing higher lows by higher daily closes, showing that bulls are trying but aren't fully in control until a real breakout, real price acceptance, and new structure is being formed above 44.40. Then 44.50, confirmed by a daily candle close above these levels to trend. Right, so we're going to want to see a daily candle close through these levels because we haven't seen a daily candle close through these levels yet. Right, once we get that and we can see that a breakout is forming, then we're going to look for new structure and price acceptance above those levels for confirmation that the bullish trend is going to continue to the upside. So when you identify conditions that aren't ideals, you either need to take extra precautions or sit out the market until the trend starts and conditions become ideal. Going into what I meant by both sides getting trapped and both sides failing, here are some examples of it happening twice today. So example of both sides getting trapped, because we are making higher lows and higher daily candle closes, looking to take buys was a higher probability, right? So context of the market, what's happening, what we're seeing, the conditions of the market, key areas, and then understanding what areas we wanted to use for our entries, right? Knowing where we wanted to participate in the market. So our highest probability trades will be looking for buys in those buy areas once we identify breaker structure demand and another demand below it. We want to see the breaker structure zone trigger and then break to shake the first buyers and then change character to trap the bears. So we want to see the second zone in demand trigger to trap more buys and wick down to stop them out to trap more sellers. So we wick down below the zone to stop out the buyers and then wick below the zone to entice more sellers. So if the second demand zone does not invalidate with the candle closing through it, we can then place our risk below the second wicked demand using context plus key levels to find our higher probability areas to take trades from. And then context to the market, knowing it's choppy, to know that we have to reduce our size, right? We are aware that these aren't ideal conditions. Take extra precautions or sit out of the market until the trend starts. So again, reiterating that. Here's what happened. Here's the breaker structure demand. Here's the structure. Here's the demand that was formed, taking out that structure. We got to push. We push back above the previous day high. So we're knowing, again, looking back here, we must look to close buys or sell above the previous day high. What happened? We pushed above the previous day high. Price came back down, sellers into the market. Again, this is a move that we could have taken, but what's stopping this move in an uptrend from pushing down, pushing into this area, wicking below it, and continuing to go, right? So seeing this zone break was the first signs that sellers were entering the market. Again, this is a trade that we could have taken knowing that we had to target this zone, right? But I wanted to trade with the trend, not against it. I wanted to trade with the trend for a higher probability. So we started breaking down, and sellers did drive the selling into the zone. What happened? We pushed into the zone. We started breaking through the zone, right? Started pushing into the zone, started breaking through the zone. Never got a breaking and close of this zone. Tapped into the second demand that was below it. So this is another area of demand that was below it. We tapped into this second zone. Price started going up, right? So it started enticing more buyers here. Price tapped into the second zone below as well. So it ran the first one, tapped into the second, started moving up, enticing both, then pushed down again, trapping both traders out. So the people who entered long here at the top of this zone, they got stopped out. Then the people that joined in again, right, started pushing up. They got stopped out, and then they pushed again into the second zone to run the second zone. So now it stopped out the people who entered at the second zone and the people who entered when price tried to reclaim this zone, right? Also trapped more sellers into the market and then started going back up higher, right? So it's very important context because there's a weekly key level here now as well. So this is weekly support resting right under, as well as this second demand zone that we can use to target and using the first demand zone as inducement, right? So we never broke this demand, the lower demand zone, and we never broke back below weekly supply. So that was a good recipe for buyers there. And that's a good example of what I was talking about. Again, we saw it in the beginning of the day. This was to start the day. We had a nice break of structure here. This was the first break of structure to start a bullish trend after opening and wicking below yesterday's open. Yesterday's open was down here. Price pushed down into yesterday's open, started making this trend up. After a push below yesterday open, price changed. Price started moving up. So now what are we targeting after yesterday's open? I believe we will be targeting yesterday's close and the previous day's highs, right? If it was a bullish candle. So here's a break of structure zone. Price pushed up, did all of that. Price ran the previous day's, I believe this was the previous day's close up here. If this was the previous day's open. Yep, this was the previous day's open, this is the previous day's low, and this is the previous day's close. So what happened? Price got back above the previous day close. Sellers were looking to enter the market. Sellers entered the market and back into demand, where we saw the same thing happen. A push below demand, right? A tap, we tapped into the zone. Buyers tried to enter the market again. Buyers tried to enter the market on the first tap, pushed down below the zone. Buyers tried to enter the market again. Sellers into the market up top. We push down again. Sellers into the market down below. These buyers that entered the market twice are now getting stopped. And price never broke the break of structure zone. So we could look to enter and put our stop loss below the wick, right? That's a higher probability trade. So given the conditions that we're seeing, these not ideal conditions, these conditions where we have to trick both buyers and sellers to create the moves in the market that we want to see, this is these are the things, the ways we will have to adjust our trading and adjust our entry signal. We can no longer just take a bounce at the top of demand. We can no longer just, take a hard limit at the top of demand. We have to see and wait to see these things line up and wait to see these extra confirmations to even get us into these trades in the first place. Right? Because it's choppy conditions, we can't trade how we normally trade. If you're not going to take those extra precautions, then we're not going to trade at all. So again, to start the bullish trend after opening and wicking below yesterday's open, the daily candle yesterday wicked above the previous day's highs, but did not close above it. So with choppy conditions, seller entered above previous day's highs, driving price back into breaking structure demand, trapping buyers, pushing below, trapping sellers, and then squeezing sellers. So that's pretty much an example of the tweaks that I had to make, right? We can no longer just take the first tap that goes into the man, react to the first bounce that happens at the top of the zone, any of that. These are the tweaks, given the conditions, given the story of the market, given the context, how we have to make adjustments. So that's the example of how I had to tweak my strategy and tweak my entry criteria so that I can take higher probability trades while these conditions are changing. So this is the part where I wanted to talk about grading and defining your trading success or the day's success. Not by a P&L, but by how well I stuck to my plan and how well I stuck to the process. So for the conclusion of today was a winning day despite P&L. We were rich in discipline and sticking to our process. Besides a few slip-ups with sticking to areas to trade from, today was good trading. I took some losses, but I stayed within risk, and I didn't force more trades or force hitting my loss limit. I recognized conditions were not favorable and made adjustments to finding new high probability entry triggers. I recognized when I was taking trades that could be avoided and learned from my losses by the end of the day, creating a new plan and tweaks to prevent from happening again. I was disciplined in life before coming to the market, and I was ready to perform. I created a clear if-then statement and had a clear plan laid out and updated in Discord throughout the day. I walked away and left the charts, accepting anything could happen while I was away, and I didn't have to be present for more trading, avoiding further damage and trading on tilt. Right, so a lot of things I did good today. Outside of trading, I had a very good day. I had a very disciplined day, and I got a lot of things done that I wanted to do. So after I took, the losses trading, I continued to just move on with life. It was a lot easier to get past those losses and not carry them on into life, not carry them on into the rest of my day. So it was a lot of things that I did very well. And on top of it all, I can still easily come back from this day with a couple winners, sticking to my proper risk management and sticking to my proper risk to reward. So just knowing that I'm sticking to the process, this is I wanted to have this slide and have this saved and have this in my documents folder and in my PC where I could find it, to know that even when the profit and loss is not reflecting it, we can still feel good about the wins that we are taking, because now we are following our plan, right? We have it in writing now. Usually I put it in my conclusions, what I did right, and then next slide, my improvements, what I need to do better. So that's what it is. This was the conclusions. We stuck to our plan and our process very well today, right? And we were able to identify what happened and what went wrong and what we need to change and prevent, or change or not do next time altogether. So this is a video I'm going to be referring to a lot for myself. This is a very important moment in my trading. This is a very important moment for my strategy, identifying how I can make adjustments for conditions and still be able to, take high probability trades and continue to trade and have more in my arsenal, right? And if I don't see any entry triggers at all, regardless of the conditions, right? For the conditions where it is ideal and for the conditions where it's not ideal, having the discipline to not take those trades and know that I don't have to, less is more, and that I don't have to trade every single day, right? Today, there was opportunity present in the market, but it wasn't ideal for our normal entry criteria. So we had to make adjustments. So again, I'm going to be referencing this a lot for myself in the future and every day, moving forward. So if you found this helpful, if you were able to take something away from this video, make sure you leave a like. Let me know how you guys handle changing market conditions. And thanks for watching. I'll catch you guys in the next one.